Today we're going to talk about how lenders come up with mortgage rates, because I get a lot of questions about this, and also because I think it's very misunderstood and it leads people into really bad positions. So here's something I hear a lot. Well, I saw the 30-year rates at this. No, it's not really the way it works. So pricing works like this. You have a base rate that you, the consumer, me, the lender, I don't see it, you don't see it, okay? So you've got your base rates right here. This is, the level at which the money is lent to the lender to lend to you, okay? And then on top of that, you have what's known as loan level price adjusters. Yes. So a loan level price adjuster would be like if it's a condo, that there's an adjustment for that. If your credit score is XYZ, there's an adjustment for that. And I'm talking about conventional loans or jumbo loans right now. I am not talking about VA, okay? So there's adjusters based on loan to value, debt to income. There's all these adjusters. And for Fannie Mae and Freddie Mac, they're actually industry-wide the same. Okay, and I think you could probably get it if you Googled it. If you Google Fannie Mae or Freddie Mac, loan level pricing adjusters, that should give you what the adjusters are. Okay, so there's that. And you're like, okay, great, that's my rate. No, there's two more layers, guys. Okay, so then you go to the next layer. The layer is the institution that's giving you the loan. So, what are their margins? How much money? I always picture this as a cake, so like a 3-layer cake, okay? So we did our first layer, which is the base rates and the loan level pricing adjusters. Now we're going to the next layer of the cake. Okay, and this is going to be how much the company itself wants to make off of the loan. Okay, so we'll see with some companies that like picture frosting, they're like throwing it on because they're trying to make a fortune off of every single loan. So they're taking that base rate and they're just totally increasing it because they want to make a certain amount of money, okay? And then we see other ones where like picture very thin layer of frosting, right? They're keeping their margins low so that they can try to get you the best rate. Usually that's a volume player, okay? And we're going to talk about that in a minute. And then you've got your third layer. And your third layer is the individual licensed originator. Yes. So that's important because sometimes people will be like, oh, well, I'm talking to XYZ company, or I'm talking to this broker, or I'm talking to... Each person can have a different amount that they want to make. So like, for instance, if I did 5 loans a month, my layer of that cake, I would probably be adding a lot more frosting than I'm adding right now. Right now, I'm a very thin layer. I'm a thin layer to the point where people are often like, Jen, why are you so thin on that? And I'm like, volume. I'm doing a lot of loans, okay? I'm gonna do a lot of loans. I'm gonna help a lot of people. I just need a little bit of frosting to keep the lights on. Whereas there's other lenders who are like, I'm gonna do 5 loans a month and those 5 clients are gonna pay for my lifestyle. So they're like heaping on the frosting, okay? And you can sometimes see this at the same company. You could see one lender charging 0.5% higher than another lender at the same company. I'm not kidding. And with brokering, right? Because the brokers will be like, oh, well, we don't have that middle layer. You do though, because they're going to be taking your loan either to, United Wholesale, Quicken, there's a whole handful of who brokers would go to, New Res with their loans, right? So you still have that middle layer. What is that middle layer trying to make? And then you have that top layer. What's the broker trying to make? Is the broker doing a thin layer, or is the broker laying on the frosting? Okay, so when you guys are talking about rates, or when I get the question, because I'll get it in comments a lot, I'll get, well, what's the rate for a 30-year fixed? And I'm like, well, if it's conventional, there's all those loan level pricing adjusters. So I need to know more about your situation, but also, are you asking me as if I'm pricing your loan, or what are you asking? Because if you talk to another lender, you've got that margin, and then how much frosting is that lender putting on top? How much? How much? So there is no one rate. You basically have these 3 layers, and these 3 layers can be very dramatic based on who you talk to. Now, just to circle back to VA for a minute, VA does not have loan level pricing adjusters. Okay. However, what I'll see on VA, and it's one of the and I might get fired up. I'm getting fired up. I'll see that the margins on VA, you'll see some companies where you're like, oh my God, they put in 14 other layers to that cake. Like instead of being that 3-layer cake, there's like 14 because they're trying to make so much money off of it. And then you'll see the originator, that's the licensed individual, the Jennifer in the transaction. You'll be like, they added another 10 layers to the cake. So what should be down here is up there. Right? So that's why it's so important to shop rates, because you guys are not looking at base rates. You're not looking at base rates with loan level pricing adjustments. You're looking at base rates plus these other layers to the cake. How much is the company making? How much is the originator making? Now, there is a very popular company that loves to say, we don't pay our originators, therefore you get better deals. Okay. This company that I'm referring to, their middle layer is like that. Okay, it is so fat. So even though they're paying the originators nickels, they are making so much money here that your rate's the same. Seriously. Seriously. So you guys want to watch out for marketing. And what you really need to understand is that whenever you're pricing a loan, it's really not company to company. It is person to person. Person to person. The only exceptions would be the banks, because the banks, you know, they have the top margin set. But if you're dealing with a broker or anything else, you're going to see variances. And just because it's set with the banks doesn't mean that that middle layer of the cake isn't fat. So I hope, I probably should have done this with a real cake, but I hope this was helpful and that you guys understand there's not one rate. There's all these different layers of margins, and margins are money that banks and lenders and everyone's trying to make off of this rate, because that's where the money is. The money is in the rate that you are offered. So I hope this has been helpful. If it wasn't, let me know. I know it was a little bit out there. I'm licensed in 46 states. I have a very thin layer of icing on my cake, so give me a call.